Most people see a dividend as a small reward, a little cash in their pocket from a company they own a piece of. But that's like getting a seed from a tree and eating it instead of planting it. The real life-changing power of dividend stocks isn't in spending the payout. It's in putting that money straight back to work. When you systematically reinvest every dividend, you're not just earning a little extra income, you're turning on one of the most formidable wealth-building engines ever created. This isn't just a clever idea, it's a historically proven fact. A team of financial historians decided to look back at over a century of market returns, from 1900 all the way to 2020. They asked a simple question: what would happen to a single dollar invested in U.S. stocks if every dividend was immediately reinvested? The answer was astonishing. That $1, after adjusting for inflation, grew into $2,291. A dollar in bonds or cash? It also grew, but it wasn't even in the same league. For over a century, in every country they studied, this simple strategy of reinvesting dividends has crushed almost every other way of growing money. But let's bring this out of the history books. Think of a company like Nestle. It's not a high-flying tech stock. It's a steady, global giant that sells food and drinks. Imagine you invested 100,000 Swiss francs at the end of 2003, and every May you took the dividend payment, after taxes, and simply bought more Nestle shares. You never added another franc of your own savings. By today, your share count would have swelled from about 3,200 to nearly 4,800. The annual cash your investment generates, it would have jumped from 1,500 francs to over 9,300 francs. Your effective dividend yield on your original investment would have exploded from a modest 1.5% to a massive 9.3%. You didn't do anything but click a button once a year. The true engine here is compounding, the classic snowball rolling downhill. Early on, the effect is small. Your dividends buy just a handful of new shares. But those new shares start earning their own dividends, and those dividends buy even more shares. The process accelerates, growing bigger and faster over time. It's the kind of power that led Albert Einstein to reportedly call compound interest the greatest invention of the human mind. And perhaps the most powerful shift is psychological. When you adopt this strategy, your entire relationship with the market changes. You no longer fear downturns. Why? Because a company like Nestle keeps selling coffee and candy bars whether the market is up or down. So when stock prices fall, it's not a crisis, it's a sale. Your reinvested dividends are now buying more shares at a discount, automatically setting the stage for even higher income in the future. Fear becomes opportunity. Discipline matters, but so does choosing the right companies. You're looking for businesses built to last, ones that don't just pay a dividend, but have a long, proven history of raising it year after year. A great place to start your search is with the dividend achievers, companies with at least 10 straight years of dividend hikes, or the even more elite dividend aristocrats with 25 years. And at the pinnacle, the dividend kings, with an incredible 50 years or more of increases. These are the kinds of compounding machines that don't just generate a little income on the side. They are the engines for building durable, growing, and truly substantial wealth.